Welcome to TradeTheNBI.com. This is John. This report is for the 20th, and as we get close to the holiday, you can see we're in just that sideways stall like we talked about. But now we got the minor DOC spread right here that suggested a little bit more weakness, but with the reset of steel down here, we've got short-term buyers that are flush, ready to go. We're still maintaining red above zero, which is an indication that there's still far more buying than selling at this particular point. And we just got the start of another rise in the shakeout, so it could be a little bit longer before any sell signal. We're not going to end up with like a steel cross below cyan here to give you a trigger. The best you'll get will be the orange breaking down in between, and right now with this spread being so narrow between the two, we could see a turnaround pretty quickly. What we needed to see was the refilling of the positive extremes. We got close to it. The second one right here, that one filled in. Let's get that back over there. Okay, so this one met it, didn't quite get to the lows of this one. That would have to be a break of the ABM, and at this particular point the ABM still rising. You can see both the yellow, magenta, all of them so close together now, and real significant move would be down to the green. So I think that things went as expected, finalizing the Trump election, and that I think for the market is just a general sigh of relief. I don't know that it's any more excitement. You've already had the build up. Not a whole lot more to do with that. Now you're actually going to have to see some kind of concrete action that is going to suggest that things are going to move in the direction the market has anticipated. So, I mean, this move is predicated on that from the election moving forward. So, still, we're seeing a little bit less overbought from the Dow as it consolidates across here. You can see that we're breaking down in the shakeout, moving lower. We're not getting the reset, though, from the DOC, which means we are still a little too frothy at this particular point. You can see the euro is tangibly holding on, but it's just been a slow cascade here. It's going to be problematic. It's also going to put pressure on some of the S&P companies that have the foreign earnings. I think that's part of the dampening of market interests. We see also a little bit of increase here at TLT. Best day in a while, but relative to what? Yeah, exactly. Not much there. In oil, just holding pretty much flat. It's staying in this baseline, and we talked about this from when it broke out right in here, that as long as it can maintain right in that range, I think that's fairly healthy. Gold, nothing. Got real problems with this cashless version in India going on. There's going to be some capital controls potentially in China. Those are big markets for gold, and it's going to have an impact. And here we go with the 5K. So we had the nice little pop, and then we talked about it right here as we were declining into it. And I said, it's a perfect opportunity to look for a move back to the highs. And sure enough, that would be worth about 5 to 6 points, and in fact was. And that was pretty straightforward. Then the short signal came out, and it bounced back and forth, but ultimately ended up giving a nice dip from where the signal was. The signal came in that orange bar at the 58, and we got down as low as 54. I mean, there was a whole lot of movement in the day, so I mean, from that standpoint, that's about as much as going to be offered. So sometimes you just have to take what is, and there isn't anything you can do about it. You just have to accept that. And right now we have a little bit lull in volatility as some of this previous moves get absorbed. We're not really looking for anything to change on that at this particular point. The market seems pretty content with where things are. They're just looking for any finalization of picks. We don't know if any are going to come before the actual holiday, so that will be an interesting one, whether or not we're in a hold pattern until after the new year, or something breaks as far as news and that. Obviously, we had some terrorism take place in Europe. As long as it doesn't impact the U.S., I don't expect any major foreshocks. We should still just continue to graduate higher as fund managers have to catch up to yield, and that's just the way it works. As always, continue to look for me on the Skype chat. Did some wonderful little programming tips and got some suggestions from several different members on little adjustments they wanted, and I'm going to start plugging some of those in as a little more time and has passed and have the availability. But as always, continue to look for me on that Skype chat. Treadwell?